12:30 p.m. only on Bloomberg Quint.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's see what the Asian markets are doing. Most of them are trading flat, and that's also reflected on the SGX Nifty, which is up almost 12 points. It's come off significantly from the highs of the day. Nevertheless, it's an opening that will happen pretty much a flat opening or a slightly positive opening as per the current rates. Now, what happened as far as the ADRs are concerned? Majority of the ADRs managed to end with a positive bias. Aluminium continues to surge on the LME, and that is why Vedanta was up almost 2% in trade. What didn't do well was counters like Tata Motors and ICICI Bank, which were down in trade, and Dr. Reddy's was also rather weak in trade. Now, if you're looking at what happened with crude, crude was up over 2%, it's gained almost 8% in the last 3 or 4 trading sessions. Today, it's trading slightly weak, but Brent is almost at 72, and WTI is almost at 67 at this point of time. Base metals did well on the LME. Aluminium continues its good run of almost 2% gain that happened. Nickel was up over 1%. Lead and tin also did well, but there is significant amount of weakness that we are seeing in base metals in China. Zinc is down almost 2.5%. Copper is down almost 1%, and 0.8% drop in both aluminium as well as steel currently. Gold did manage to rally over 1% in trade yesterday, but right now it's trading rather flat in trade. Fund flows, FIs were net sellers in the market, and FI, DI, both of them were net buyers in the market. Both, if you're looking at the FIs, they sold in almost 1,700 crores in the cash market this month, and DIs have bought in almost 3,700 crores in the cash market this month. Now, if you're looking at what happened individual, some of the sectors, Nifty Bank, mid cap and small caps saw selling. The Nifty was rather flat in trade. Which were the sectors that did well were metal, IT and pharma. That managed to move up in trade. PSU banks continue to bleed. They were down almost 2.5% in trade. The VIX was also rather stable, given the fact that the markets were very range bound in trade. Now, what happened with the Nifty? The Nifty was up 15 points. Reliance, TCS and Infosys were the major contributors, but because of banks, ICICI Bank, SBI and the oil marketing companies, there was weakness that was seen on the Nifty itself. But on the FNO side, what we saw was fresh buying that was seen on the Nifty on open interest build up of 5%. But on the Nifty Bank, there was long unwinding. There was long unwinding that was seen. Open interest was down almost 3% on the counter. Now, what happened as far as the VIX is concerned? VIX was rather flat in trade, didn't move much. But individually, you have to look at some of the counters. The PCR managed to inch up. The Nifty was rather range bound from 1.47 to 1.50. Now, in terms of where positions were taken, yesterday at higher levels, call writers shed position, but they are active at 10,400, at 10,500 and 600. But put writers seem to be having a strong support at levels of 10,400. So that's what we are watching. If you take a look at the open interest, total open interest build up, both the call and put writers are active at the 10,400 mark. Put writers are active at 10,300, call writers are active at 10,500. So it's expected to be range bound between 10,300 and 10,500 unless any of the side is broken with high force. There we might see big moves that could probably come in. Now, JP Associates is the counter that's come into the FNO ban. So there are 3 stocks that are in the FNO ban, and JP Associates joins them. 2 stocks I want to highlight. Yesterday, Bata moved higher on high open interest build up of 12%, and IRB Infra was up 10% on open interest build up of 10%. So that's something that you need to watch out for. But let's go across now to Bloomberg's Paul Allen, who's standing by with all the big headlines from across the globe.
The latest Fed minutes show a slightly more hawkish FOMC leaning towards a faster pace of tightening. Several members noted a stronger outlook for the economy and for inflation, saying the appropriate path over the next few years would likely be slightly steeper than previously expected. However, officials were concerned about financial imbalances and the possibility of the economy overheating. Paul Ryan says he has no regrets about retiring, saying the Republican Party has achieved a great deal during his time as Speaker. His future had been the subject of rumour for months, and he had only given vague answers when asked about his plans. Ryan joins the queue of Republicans heading for the exit. More than 40 GOP lawmakers have either resigned this year or aren't seeking re-election. Mark Zuckerberg emerged mostly unruffled after a second day of testimony on Capitol Hill. Addressing the House, he stuck close to his theme that Facebook hadn't done enough to ensure user data wasn't misused. He also repeated his mea culpa, "It was my mistake and I'm sorry." Democrats and some Republicans said there should be more federal regulation, and Zuckerberg agreed some government action may be in order. The Hong Kong dollar fell to the weak end of its permitted band for the first time since the range was imposed in 2005. The spot rate reached 7.85 as the Asian trading day began on Thursday, according to 3 New York-based traders who saw the move. The Hong Kong Monetary Authority is obliged to buy the dollar at 7.85 if there are any such orders. Such purchases would effectively push up interest rates. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Let's take a look at the key sentence from the FOMC minutes. This is the minutes of the March 2021 meeting that everyone is referring to. A number of participants among the FOMC indicated that the stronger outlook for economic activity, along with their increased confidence that inflation would return to 2% over the medium term, implied that the appropriate path for the federal funds rate over the next few years would be slightly steeper than they had previously expected. Now, wait a minute, everybody. We knew that the dots shifted at the March meeting. We already knew that the consensus was now firmly around 3 hikes and just almost as many people looking for 4 rate hikes. So it seems to me that was already in the mix. Now, another thing in these minutes, the majority of Fed officials also, they shrugged off tariffs. You know, tariffs don't have a big impact, but they saw prospects for trade war or retaliation on tariffs, as they put it, as a downside risk to the economy. So they're already acknowledging, almost a month ago, that this is something that could have a difference on the path of rate hikes, I think. One more thing. Let's take a look at the March Consumer Price Index, because it did accelerate as expected. In fact, we're going to show you a GTV chart looking at core versus headline CPI, because what happened here is there's 2%. You can see the blue line, that's the headline, up to about 2.4%, and the core CPI went from 1.8 to 2.1. The whole idea, we knew this, we talked about it yesterday. Mobile phone decline prices, service prices are going to drop out. But I also want to remind everybody, by looking at another GTV chart, that yes, CPI is moving higher, but you know what? What the Fed watches really is that lower line. It's the core PCE. PCE headline, core PCE are far below 2%. Now, the idea is, of course, that if CPI is moving up, they'll move up too, but that's what remains to be seen. So maybe I really myself don't see the Fed as being that much more hawkish, because I think they'd already given us clues in the direction they're leaning.
The oil markets for now.
SocGen saying there's a 70% chance that Donald Trump won't extend the waivers on Iran, so we could see harsher sanctions on the country. What will this do to the global market if we have Iranian oil coming off?
We have a lot of oil in the markets today, in the lots of stocks. A tremendous amount of oil coming from United States. We are seeing the second wave of a shale revolution is taking place, and as a result, I believe that markets will be well supplied for the next years to come.
On top of Iran, though, we do have an economic crisis in Venezuela. We are seeing them as well lose a lot of oil. Do you think it's time, with Iran, Venezuela, possibly to more tightening in the market, for OPEC to dial back the historic deal?
It is up to OPEC to decide what they are going to do. But two things. I believe it is in the benefit of everybody that the oil prices are determined by the markets. Second, in terms of Venezuela, this is something very serious. The Venezuelan oil production today is about the half of the level when Mr. Chavez took office in 1999. So we have never seen such a big drop in oil production in a country. And when we look at the trends, I can only say that it will continue to go down. And the question that we don't know how much it will go down, an important point in the global oil market debate.
And do you think that the oil market, due to this, will be tightened, rebalance even quicker?
It will definitely bring the producing countries' total production downwards.
Bloomberg News had a story recently that Saudi Arabia, Riyadh, is looking to target $80 per barrel. Do you think this is possible?
Yeah, I hear such news in the last few days, but I can tell you very frankly here. very high oil prices are not in the interest of the oil importing countries, especially this country like India where we are now, ranging from the economic growth to trade balance, but also, perhaps as important as that, high oil prices, very high oil prices for a long time is not in the benefit, in the interest of the oil exporting countries as well. So one should be very careful what one is wishing for. Very long time, very long prices is not in the interest of the oil exporting countries and oil importing countries, and as such for the global economy.
So is this target price, you think, a mistake?
No, it's up to them. I don't talk about the prices, the price levels. But what I'm saying is I wish the oil prices are determined by the market forces. And if we see very high prices for a very long time, this is definitely bad news for the global economy, for oil exporters and oil importers like the countries like in India.
I spoke to the Indian minister, Pradhan. He's saying he's targeting, he thinks a reasonable price would be $50 a barrel, fair for both importers and exporters. Where do you see demand in India going?
Indian demand, oil demand is growing. I would say exploding, because India is an economy which is flourishing, over 7% growth, which means that lots of energy is needed, oil, gas, renewables, all of them. And since India has very poor domestic oil production, oil imports will be skyrocketing. And as such, India's economy's vulnerability vis-a-vis the high oil prices will be also increasing. Therefore, India will be one of the countries which will be very seriously affected from high oil prices. And I know that Indian government is taking measures domestically and internationally to address this issue.
Right, because prices...
Well, shifting back the focus from oil commodity and the companies in focus now, let's focus on stock of the day, which is Cochin Shipyard. That company is going to be meeting bunch of fund houses today in the likes of ICICI Prudential, HDFC Mutual Fund and Sundaram Mutual Fund. So we're expecting some kind of focus to remain on the stock for the particular day. I'm going to quickly give you a rundown of the stock momentum as well as the financial performance of the company, along with what's working well. Well, if you look at the YTD performance, it's not a great picture. We're looking at a 6% decline for this counter. 1 year has been fairly decent show for this company, at least in stock performance. We're looking at a 20% return. If you look at the shareholding pattern, you would realize that the shareholding promoter holds a good 75% stake in this company, while the public shareholding stands at roughly around 25%. What is working well for the company? Well, what is working well for the largest public shipyard with a market capitalization of the 7,500 crore is its balance sheet. If you look at that, it's virtually a debt-free company that we're talking about, and it also has good cash of over 2,500 crore. It's embarking upon a huge capex plan of around 3,000 odd crore, which is going to be spent in the next 3 years. Despite that, the company is expected to fund that through internal accruals and is expected to remain debt-free throughout the course of expansion. If you look at the total order backlog, the company has an order backlog of more than 18,000 odd crore, which provides a strong revenue visibility until FY21, given the strong execution skills that we're witnessing. Also, it's embarking upon new initiatives like inland water transportation along with coastal shipping vessel. If you look at the financial picture, well, sales is pretty much up by 14%. EBITDA, the whole number is almost a flattish that you'd see. Margins somehow have seen a downtick, at least for 9-month basis, and PAT remains, the bottom line performance remains pretty much average at 8% growth.
Well, speaking about currency and commodities market, talking about rupee first, it was quite a volatile session for the home currency yesterday as it depreciated over 0.5% to hit a 5-month low of 65.31 levels against the dollar. Now, surging crude oil prices along with growing geopolitical uncertainties largely weighed on the foreign market sentiments. The domestic currency has been the second worst performing Asian currency on a year-to-date basis. It has weakened almost 2.2% so far this this year. Now, speaking about debt markets, sovereign bonds declined yesterday for the 4th consecutive session as surging crude oil prices weighed on the bond markets as well. And hence, we have seen yield on a 10-year benchmark security rising nearly 16 basis points to 7.54%. Now, remember, yields have risen almost 40 basis points in the last 4 trading sessions. In terms of flows into debt market, global funds decreased their rupee debt holdings for the 3rd consecutive session yesterday. They decreased their debt portfolio by approximately 1,500 crore according to NSDL data. Well, on the global front, dollar index failed to gain traction against major currencies yesterday despite accelerating inflation along with hawkish FOMC minutes, as majority of Fed officials expressed concerns that a trade war could hurt the economy in the near term. Elsewhere, Japanese yen gained in trade yesterday against the dollar as investors rushed to safe haven currencies on concerns over US military action on Syria. And lastly, speaking of dollar rupee, now it is trading at 65.20 levels against the dollar in the non-deliverable forward markets, which indicates a positive opening for Indian rupee in today's trade. Well, having said that, let's shift focus to commodity space. Good morning, Jayesh. Oil prices are near 3-year high. What is triggering the movement there?
Morning, Saloni. That's right. Oil, in fact, touched a 3-year high, despite the fact that we saw a surge in the inventory levels. So EIA has reported an inventory buildup of about 3.3 million barrels for last week. However, there's plenty of news that has rocked the oil markets. One is on the global tensions front. Trump has actually warned Russia that to get ready for a Syria missile attack, and also that Saudi Arabia said it has actually intercepted, a missile attack over Riyadh, that is. On the back of this, we did see a 2% uptake in both WTI and Brent. Brent is in fact now crossed beyond the nearly $72 for a barrel, and WTI is above the 66 per barrel mark. Shifting focus to the base metal space, the base metal index on London Metal Exchange climbed for the 3rd consecutive session this week. In fact, all base metals managed to climb except for zinc. Now, aluminium was particularly in focus, and it has been throughout this week. It did see a 2% uptake, yet another 2% uptake for itself. Now, you have to keep an eye on, China to fill the aluminium void that has been created during this week on the back of sanctions being imposed. That is because China may, account for 68% of the new production as per a Bloomberg intelligence report. Why is this so? Is because Russia's Rusal is now struggling to sell its metal that has already been produced. Why is this important? Is because Rusal actually supplies or produces 6% of the overall supply and is key for LME inventory. So that's as far as the base metals are concerned. And most of these base metals have in fact started on a negative note as far as the Shanghai Futures Exchange is concerned. Shifting focus to the precious metal space, gold was in focus, and it actually climbed for the 4th day as the Syria missile drama unfolded. Now, it was also aided by the dollar index, which actually closed lower for the 5th consecutive session.
Which are the stocks that you need to watch out for today? Well, Tata Motors Group global wholesales came in at 1.53 lakh units for the month of March 2018. That's a growth of 18%, so watch out for that name. We're also watching out for Biocon, which has said that its partner Mylan has partnered with Fujifilm Kyowa, and that is to commercialize adalimumab biosimilar in EU. Now, remember, Fujifilm Kyowa's version is expected to get an approval in Europe in the second half of 2018, and hence it will, help Biocon Mylan to accelerate their presence with this biosimilar in EU. So that's another stock that we are watching. That apart, you have Indian Energy Exchange, which has said that they've signed a pact with Japan Electric Power Exchange, and together they will explore opportunities in the Indian electricity market. So that's another stock that we're tracking. RBI penalty coming in for IDBI Bank. Now they've imposed a monetary penalty of 3 crores, and that is for non-compliance of NPA norms. This could probably have to do with the NPA divergence reported for FY16. Remember, you also recently had a monetary penalty being imposed on Axis Bank. So those are some of the names that we are tracking. That apart, we're also tracking some of the stocks on the back of bulk deals.
Now we have quality, where Letco Bruzo Emerging Markets Equity Fund has bought 1.7% stake, and on the other hand, the seller is Siddhant Gupta. The stock already reacted quite a bit yesterday, so let's see if we see any additional movement. We're also watching out for Mahanagar Gas, where Society Generale has picked up 1.3% stake. Remember, the promoter BG Asia Holdings was looking to sell up to 12.5% stake yesterday in a couple of block deals, and they managed to sell about 8.5%. That apart, you also have Praxis Home Retail, which was listed in January. Their Cedar Supports Services, which for whom the parent organization is Bharti Ventures, they have sold 4.4% stake yesterday, and they had about 9.4% stake as of January 2018. So that's another stock to watch out for.
Things are changing on the ground as far as some of the big major Indian companies are concerned. You take the example of L&T, Mahindra, Ashok Leyland. These are some of the private sector companies which have become critical in nature with respect to the size of operations they have in the defense sector. Public sector units like Bharat Electronics or BEML again are already big companies. But when it comes to the private sector, there is a feeling that they have reached a critical mass. Some of the tie-ups which they have been doing at the Defence Expo and the announcements they have been making, it gives an indication that they are all set to participate in a very big strategic way in manufacturing some of the big equipment or defence systems. Mahindra on Wednesday tied up with two companies, Simwawa and aeronautics for seaplane and for marine UAV, and these are very hi-fi niche technologies which are not currently available, is currently there in the country, and Mahindra aims to produce them in India. They are also partnering with BAE Systems for the M777 ultra-light howitzer. That's again something which they've been producing. Ashok Leyland, on the other hand, has been looking at expanding its portfolio from just providing trucks to providing logistical systems going forward. So if a decade back Ashok Leyland was looking at only 2% of the total armed forces defense budget, today it's catering to nearly 20-22% of, or it is capable of catering to 20-22% of the defense budget. That's one. Bharat Electronics is in for a long time into defense stuff. They got 10,000 crores of orders for last fiscal, which took the entire order book to 40,000. So they are into missile systems as well. L&T is something which has again expanding its horizon. It's one of the largest defense maker available on the naval system. They have the activities in the land system. And today or on Wednesday, it tied up with Bharat Electronics to expand that and expand its manufacturing facilities further. So the Indian ecosystem or the private sector in general is turning the corner, and it's no longer small in nature. It's willing to take the big leap because of the last 10 years they've been learning a lot of new technologies of how to execute, how to assemble foreign technologies and foreign equipments, and that's what is getting reflected at the Defence Expo, where they are tying up with foreign OEMs.
Our seaplane project, we envisage, it of course depends upon when India and Japan reach an agreement on procurement. That is something on which this project's success will depend. We are hopeful that once that happens, we will be able to have a large Make in India component in this. Indigenization of the project will depend upon number of the units which are ordered, as and when they are ordered. However, there are many things which will be done notwithstanding the number of units. For example, MRO has to be in India. Yeah. For example, pilot training has to be in India. Similarly, certain assemblies, sub-assemblies can happen in India. So, extent of indigenization will be decided only when contours of the procurement becomes clear, which is currently still undergoing discussions.
Now, yesterday, all the oil marketing companies were in focus after a Bloomberg report suggested that they would have to absorb 1 rupee per litre increase in the petrol or diesel prices. Backed by this, all the OMCs actually declined in trade, nearly 7 to 8%. Let's have a look at what delivery volume they clocked for themselves. So BPCL was the first stock that fell about 7.5% and saw delivery selling of nearly 400 crores. The delivery volume shot up 131% at 95 lakh shares as compared to its 5-day average, and the total volume surged about 162% at nearly 2 crore shares as compared to its 5-day average. The second OMC, HPCL, that was down about 7.5% as well and saw delivery selling of 139 crores. The delivery volume shot up 121% at nearly 41 lakh shares as compared to its 5-day average, and the total volume surged about 187% at nearly 1.6 crore shares as compared to its 5-day average. Last and final oil marketing company, IOC. Now that was down about 6.5% in trade and saw delivery selling in excess of 200 crores. The delivery volume shot up 100% at about 1.3 crore shares as compared to its 5-day average, and the total volume surged about 150% at nearly 3 crore shares as compared to its 5-day average.
Well, lots to talk about today, including, of course, geopolitical tensions weighing heavy on the markets. So you can find all the live market action right here on Bloomberg Quint Live, but there are also several stories on the website that you can find and read. Here are just a few of them. Office leasing rose to a record high in India's top cities in the 3 months ended March. That is usually a muted quarter, and that's been driven by demand from technology, banking and financial services, and e-commerce companies. Now, Tata Sons has said that it is in the process of consolidating its various businesses across aerospace and defense sectors under a single entity, and that's Tata Aerospace and Defense. Well, that's all you need to know going into trade today, but up next is Indian Open, so do stay tuned. This is Bloomberg Quint.